Income from house property. With today's session, we are going to solve this advanced numerical, and the reference question is from UPSC Commerce Optional year 2020 question number 3A. So with this particular question, I'll try to highlight the amendment which we already covered related to the house property. Okay, and I'll try to connect the dot of those amendments along with the solution in this particular question. My practice will be help you to understand how to select the property as a self-occupied or deemed to be let out, and help you to connect the dots with the conceptual understanding. Okay, so if you come across any doubt at the end of the session, you will feel free to ask in a comment section. Okay, so we have seen that Y has two houses in Chennai and he has a self-occupied both the houses. The particular of the houses are as follows. So we have given the following information regarding the houses, and we have a two house 1 and house 2. The respective information I'll be reading while doing the solution. Okay, Y has paid the municipal taxes for house 2 only. It is very important to take care that we consider municipal tax only when it is paid. Clear? It is due for house 1. Compute the house property income of Y for the assessment year and advise which house should be opted by Y to be assessed as self-occupied, and state the reason. So before going ahead with the solution, what I would like to do is to help you to connect the thing with the amendment, and then we will see how to select the property as self-occupied and deemed to be let out, and then we will go to the solution. Okay, why I am doing this? Because I want to prepare you holistically related to this particular chapter and the topic. Okay, first we will recall the amendment. Okay, the important amendment. Okay, so the amendment which is applicable from assessment year 2020-21. Please don't put your time in writing, don't waste your time or spend your time in writing while watching these session, while understanding the concept. You can write, and you are advisable to write only doing answer writing practice, or if you making a last one day revision note. Okay, but that need to be very minimized. So try to focus on understanding, gain the vocabulary after reading multiple times the provisions, and then do answer writing practice. Clear? So the amendment will be applicable from assessment year 2020-21 and onwards. Okay, what's the amendment and what was the story behind the before the amendment or the prior to the amendment? So when we talk about the prior, okay, the prior to the amendment, there is only one house property which is allowed to be self-occupied. Okay, only one house property could be treated as a self-occupied property, and any additional house property which is even a self-occupied was need to be deemed to be let out, and we have to calculate the notional rental income, which we called deemed rent. Clear? But post amendment, what is a post amendment? There is an amendment in section, one second please, there is an amendment in section 23 subclause 4. Okay, that individual taxpayer can now treat two house property as a self-occupied. Okay, as a self-occupied property if only and if neither, means none of them two houses is let out. That means it is completely self-occupied or not been let out due to any of the reason, and both the houses are self-occupied. So one can take both the houses as a self-occupied property with effect from assessment year 2020 and 21. I hope it's clear. When it comes to the self-occupied property, I want to recall, when it has come to the self-occupied property, we understood that how NAV can be nil. We understood already. You don't need to mug up, you have to feel it. You have to understand that in case of NAV, self-occupied property is NAV is nil. So now in the given question, there are two house property. So we can easily assume that both house properties as well as in with effect from assessment year 2020 and 2021 are treated as self-occupied property, and we don't need to understand any property as a let out. It is simple solution, you can just put it. But the question has been raised in the year 2020 only. Okay, so we have to assume that it is before the amendment. Then we have to select one property as self-occupied and the other as let out. Satisfied? There might be a situation when you come across more than two houses, say three houses or four houses, then also you can apply this technique. Then how to select that which you can select as a self-occupied and which as a let out. Okay. So the next thing we are going to see is the selection. How we'll do the selection. So in our current case, we have only two houses. This same will be applied if we have more than two houses. Okay, we have house 1 and house 2. Agree? So we have to calculate the deduction. Okay, deductions. So when we check about municipal tax, okay, then we have a standard deduction which is equal in all the case, and then interest. Sorry, interest on loan or a borrowed capital. Okay, so when we talk about house 1, in case of house 1, why has paid the municipal tax for house 2 only? So there is no house 1, right, municipal tax. And when we check interest on loan, there is nil. So nothing in case of house 1. No municipal tax, no standard deduction, or no interest on loan. But when we talk about house 2, okay, we have municipal tax paid. So it is due for house 1, but it is paid for house 2. So 8% of municipal tax, that is 1,15,000, if you can see. Anna? So we have municipal tax also in this case, and we have 55,000 as an interest on borrowed capital. That means we have municipal tax and we have interest on borrowed capital. Then how you can select, okay, I should take this particular house as a self-occupied or this particular house as a let out. So when we check both the houses, we have a maximum deduction available in case of house 2, if you can see. Anna? So the deduction is more in house 2. So because there is no municipal tax paid in house 1, okay, there is no interest on borrowed loan in house 1. So a standard deduction is applicable in all the cases, and it is not applicable in case of self occupied property, right? But when we check about house 2, we have municipal tax that is around, we can say, 9200, and here is 55,000. Agree? Which is within the limit of 2 lakh, which is allowed for repair and maintenance. Hope you can recall the interest on loan limit for self occupied property. Okay, so that's a maximum limit is 2 lakh, but we have 55,000 in our current case. So it is allowed because it is within the limit of 2 lakh of self occupied property. Agree? Okay, so there is no standard deduction for self-occupied property. So here we can see that house 2 provide maximum deduction. So it is better to select house 2 as a self-occupied, okay, because it allows the maximum deduction. Okay, maximum deduction. I hope it's agree. Suppose you have more than two houses, three houses and four houses, then also you can apply same technique and you can select the house as a self-occupied or a let out. Clear? What if I have two houses as self-occupied? Then 2 lakh will be applicable in accumulations. That means in both the combinations. So you have to add both, and that should be maximum limit is 2 lakh. It is not for 2 1 for each of two. Means you have to apply 2 lakh limit for altogether in case of one SSC. Hope you're getting my point. Okay, I hope these points are clear. The amendment is clear. Then how to select their property as a self-occupied or let out is clear. Okay, moving towards the solution. Because the question has been raised in 2020, so we assume that we can take one property as self-occupied and one property as deemed to be let out. Why I am doing this? Because I am trying to help you to understand the concept and recall the concept. Okay, because it is very easy to take it as in both houses as self-occupied and just move on with the solution, right? Okay, so let's do the solution. We have house 1 and house 2. Okay, so we already understood that we took house 2 as a self-occupied, and this will be deemed to be let out property. Okay, house one. Okay, why we took, we already told you. Okay, I'm writing shortcut. I already explained in the regular class session the detailed calculation. Please refer those session for proper presentation. Here I just want to connect you the dots, help you to recall the concepts, and do the finalization of the solution, not one by one steps. Okay, so gross annual value. So if you see the gross annual value, we took higher of, we take higher of municipal value and fair rent. Okay, so municipal value and the fair rent. In the current case, we have municipal value is 1,20,000, fair rent 1,50,000. Higher is 1,50,000. So 1,20,000 or 1,50,000. So higher is 150 lakh 1,50,000, which is capped to standard rent, which is rupees 1 lakh. That means it should not be more than standard rent. So maximum is the 1 lakh. Then gross annual value is the 1 lakh. Okay. Sometimes it comes like a theoretical question. In what circumstances you will find that the standard rent is equal to the gross annual value? So these kind of tricks can be raised in different kind of examination. You have to be very clear with the numbers. So if you clearly understood the numbers, you can write any kind of tricky questions. Okay. So this is 1 lakh. In this case, we have seen that standard rent is equal to gross annual value. And sometime a question I have seen in one of the government exam, that they say the municipal value and fair and actually does not play any role in computation of income from house property. Do you agree? Explain with example. So here you can say yes, actually it seems that municipal value and the fairing not playing a proper role in computation of an house property only in the situation when they are restricted to the standard rent. And you can explain with the help of example. Okay, so it is capped to the 1 lakh. I hope it's agree, no doubt. Okay. Gross annual value is nil in case of nil. Then we will reduce municipal tax paid. It is very important to check whether the tax has been paid or unpaid. So in our current scenario, in case of house one, it is not paid. So it will be nil. Then we get the net annual value 1 lakh in case of house 1 and nil in case of house 2, which is deemed to be which is actually the self occupied. Clear? Less standard deduction, which is 30%. In this case, nil. Okay, then we have interest on loan. So we have interest on loan. In case of house 1, nil. In case of house 2, 55,000. Okay, nil. Sorry, and this is 55,000. So income from house, that is 70,000 here and 55,000 is here. And net income from house property, okay, 70,000 less 55,000, that is 15,000. Okay, 15,000 is a net income from the house property. I hope it's clear. There is no doubt so far. Okay, so when we talk about when we take two properties as a self-occupied property, the net annual value of both the property will be nil. Okay, so we cannot assume any deemed rental profit income. So in this case, what we have to assume, we have to, for the deduction of interest on home loan, which is available for both the houses combined, which is subject to the 2 lakh. So we have to compute 2 lakh as a complete. Okay, and municipal tax, there is no rule of municipal tax if we take both the houses as self occupied property. So I hope this is clear. Okay, I want to explain one more point before winding up this session. Okay, I want to give you, because some of you might solve this question as both the houses as self-occupied. Then NAV is nil in both the cases. If you see, less, there is no rule of standard deduction, if you can say. We have interest on loan. That means municipal tax is not deductible for self-occupied property. Why? Because GAV is nil. Standard deduction does not apply for self-occupied property. Why? Because NAV is nil. Hana? So interest on loan, there is no interest on loan in case of one. Again, I'm going to show you before concluding. And 55,000 in case of two. 55,000 in case of two. So income from house property, I'm writing shortcut, please avoid for examination. 55,000, that means we have loss from house property, that is rupees 55,000. I hope you are agree in case we take both the houses as self-occupied. One more point I want to recall, the limit of 2 lakh, which is on repair and maintenance. If we took a loan for repair and maintenance and all, that 2 lakh will be applicable in combination. That means in summation and addition of both the houses. Okay. So I hope I able to recall you all the relevant and important provisions which has been raised in this particular question. And we also recall the amendment, and we try to solve the question as per the year 2020 and as on today also. So I hope the concepts are clear. For more detailed understanding, it is advisable to go to the static syllabus or questions we have already covered. Okay, these are the advanced we are doing here. Okay, so see you in the next session with more knowledge. In case of any query, feel free to ask in a comment section. Till then, take care, bye bye, and Jai Hind.